For more on the latest about the Chinese economy, we are joined in Hong Kong by Hong Hao, Chief Economist at Grow Investment Group. In Los Angeles, William Li, Chief Economist with Milken Institute. Gentlemen, welcome to the program. Thank you so much for joining us. Let me go to you, Mr. Li, about your take. Of course, that's 4.5%, 2.2% already year-on-year growth compared to last year. As we know, first quarter last year actually was 4.8%, but this year's fourth quarter 4.5% growth is the highest since the second quarter of last year. So what do you make of this year-on-year growth it seems that we are seeing today in Chinese economy?
I'm very impressed by China's growth, actually. It has exceeded a lot of economists' expectations, including mine. Everyone expected China to have a strong rebound from the COVID restrictions, and China is achieving that. More important for me is the fact that it's based on consumption and services, which is where the China policymakers wanted to shift demand away from the fixed asset investments, which China has way too much of, toward more consumption. And that's exactly the kind of pattern that we saw in the first quarter data. So, tremendous success story right now.
Meanwhile, we are also seeing some interesting numbers. If you look at the fixed investment, asset investment, including the manufacturing investment and also the infrastructure investment, both numbers were not up. Meanwhile, we also see the service sector actually enjoying a rebound of 5.4%. And at the same time, retail is doing very good, more than 10%. So when you see a mixture of these numbers, what does it say to you, Mr. Li?
It tells me that the China's recovery is now based on a healthier mix of consumption versus investment. And right now, the policymakers, President Xi and all the planners have been wanting to shift more of the aggregate demand into consumption, and the first quarter numbers are showing that. One of the things that we have questions about, at least the Western investors, is whether the consumption will be sustained for a longer duration. Everyone expected consumption to be very strong after the COVID restrictions were eliminated. But now, will the income growth and the property market, the wealth there, sustain the consumption? And that's the open question. But right now, the performance has been really very much on track to exceed the goals of the policymakers for GDP growth of 5%.
I want to go through what kind of details and messages will Canton Fair and some of the other similar events might be providing us as an indicator about where the trade is heading for, and what does international environment mean for China, which is one of the largest trading nations in this world.
One of the loudest messages that come from that Canton Fair is that China is announcing to the world, we are no longer a low-cost, low-value-added manufacturer. In fact, we are at the cutting edge of advanced technology, artificial intelligence, and smart stuff. Right? The Internet of Things is now not only part of China's development, but China is developing the Internet of Things. And I think that's a very strong message to say that trade, which has always been a very important part of China's growth, now is shifting in quality to the high quality, high value added stuff. And I think one of the things that we need to I think focus on is how to sustain that kind of innovation for China, because as you know, the leader in technology never stays the same, because there's always somebody who innovates and creates something different. And right now, China's Canton Fair, the products that are being shown there, is showing that China is a source of innovation. One of the things I wanted to say that Professor Liu said was very important is the unevenness of China's development. The coastal cities are doing very well, but I think the development plans to have innovation centers in Chengdu and in the West is also a very important feature that I think can be featured in the products of the Canton Fair, because many of the innovative products are coming from these Western innovation centers.
Usually in early autumn as well. How can we figure out a better way of dealing with the current challenges together, hopefully, starting from trade? That's always a thought-provoking question, isn't it?
Yeah. Oh, absolutely. And we've discussed many times in the past how the two largest economies in the world, the United States and China, really have to get together and establish a trade framework, and especially for these advanced technology and intellectual property intensive type of goods. We need to have a framework that says we have the good rules of the road so that both countries can benefit from world trade and not be to be competitive, but not to view that competition as a zero-sum game. And that framework is yet to be established. And once that framework is established, I think we'll see tremendous benefits in trade spilling over to the rest of the world. But unless we get that framework done in a cooperative way, that's the biggest threat right now. That China's innovation, American innovation need to be integrated. What if they're not integrated? We have two different systems, then we have two different sources of innovation, and then the world will have to be split between this choice of China versus US, and that would be disastrous.
Let's go to you, Mr. Lee. Indicators.
The key to China having high quality growth is having balanced and sustainable growth. And getting balanced growth means, as Mr. Hong said, more consumption, but you need to sustain consumption with income. So addressing the high youth unemployment, ensuring that families' wealth is protected in the property market, expanding the portfolio of assets to allow savings to go into something other than property are the key ingredients to having sustainable domestic demand. The other thing is the trade issue. Having intellectual property rights protection and trade with the advanced economies and emerging markets is something that gives us the balanced growth. And one more thing, distribution of growth in China. We cannot just focus on the coastal provinces. We need to look at how growth is spreading through the rest of China, especially in the western provinces like Chengdu and Chongqing.
Yes. A lot of the geography study here right now. But before we go, I do want to ask a final question for every one of you. How would you describe what we are reading today, the latest data? If you can use one or two adjectives, what are you going to say? Mr. Lee, can I knock on your door first? Very briefly.
Good start, but let's sustain the strong momentum we have.
Got it. Professor Liu?
Well, I think it's a rosy prospect, but it's still on a slightly bumpy road, and people's confidence are there. And now we need really to go for high quality growth, not only on our manufacture and service, but also on our people.
Okay, go to you, Mr. Hong.
Recovery is here.
Wow. Okay. Very positive messages coming from these three gentlemen, economists that we are relying on today to have the latest analysis of the Chinese economy and what it means for the rest of the world. Thank you so much, William Li, Liu Baocheng, and Hong Hao. Appreciate it. That's all the time we have for today. If you can find us on YouTube, Twitter, Facebook. I'm Tian Wei. Thanks for watching. See you back here tomorrow.